Hi, folks. Dan Bird here with the midday update for the daily scan on May 28th. And the market is giving back a lot of yesterday's gains. Let's take a look at where we are. And to do this, I am going to go to the charts page on the website and take a look at the 10-minute charts. Right down here, you can look at it a variety of different ways, but we'll look at each one of them. So this basically shows you going back 7 days. And you can see today at this point, and this is updated live. So right now we are right at last Monday's open. So here's where we open the week. Right here, we're higher for the week still, but we have pulled back for today. So there's today's open, and there's where we are right now. Got the 50-day right below it. I think that's the 50. Actually, it's a 13 and a 65. So this is a 65 10-minute chart, or 10-minute line right here. So we'll see if we bounce in the afternoon. That's really the key, is how things close. But if we look at the aggressive sectors, yes, they've come down a little bit, but for today and for this week, they're pretty much stable. Financials is coming down, but discretionary is hanging in there. Communication services actually going up. Industrials pull back a little bit, but everything is pretty much even to where it started the week. So I think this is mostly a result of two things. Number one, NVIDIA reporting tonight. And number two, the market just consolidating some of the gains. So nothing, I don't think, to worry about. It is not implying a broader sell-off, at least not yet. So we'll continue to watch it. If we look at the same thing for the defensive sectors, you'll see healthcare is flat. Staples actually is down. Energy is down. Utilities is down. Materials is down. So while the aggressive sectors are up or flat, the defensive sectors are actually moving lower. So what that tells you is that even though the market pulled back this morning, the rotation is not out of aggressive and into defensive. In fact, it's really out of defensive and holding on to aggressive. So that's actually good news. Then if we look at the intermarket relationships, growth versus value is actually going up. Discretionary versus staples today is pretty much flat. Technology versus the S&P is flat. Semis, again, waiting for NVIDIA tonight, and internet actually is up a little bit for the week. So again, none of this is indicating that there's should be any big concern with what's happening right now. I think the market is just consolidating some of the gains. All right, let's take a look at the daily scan of what I got. I only got one. Interestingly, I got one this morning for the bullish scan, and you see right here, it's XBI. Biotechs is the only one that showed up. And biotech has been selling off pretty much lately. So it actually started to move above the 21-day, but it's not really convincingly moving up, but something to watch. Take a look at a number of the biotech stocks. Other than that, there isn't anything else. Let's see. On here, Magnificent Seven and cohorts did get a bear signal today for CRM. So Salesforce got a bearish signal today. It's hanging in right now, but it's definitely rolling over when it hit the 200-day. So something to watch on the bearish side. But as far as bullish signals, nothing really has changed, so nothing will be added. We can go look at the CELH. This is the one that we did yesterday, and it's moving down today. So our stop is at 35.50, and it's right now at 36. Where is it? 36.13. So, and I'll show you what I've done with this. Now, notice right here the TTM squeeze histogram was rolling over. And notice also there is a little bit of a negative divergence, both on the RSI and on the PPO up here, as this made new highs right here. The momentum was declining slightly. So those are two things that should watch out for before entering the position. And what I did was I put it right in the spreadsheet now. So I put right here squeeze histogram rolling over, bearish divergence. So that's something that now I have a record of, so I can go back and look and see, if this one does fail and we lose the 4% when it hits the stop price, then I can see exactly, why that probably happened and try to avoid it the next time. So that's really the purpose of this trade worksheet, is to keep a ledger of what's been happening. And the other one is Starbucks. Starbucks going down too, along with the rest of the market. Starbucks, the stop is at 84.50, right about where the 21-day is. Starbucks right now is 85.97. So it is still hanging in there. So we're okay still with Starbucks, and we'll continue to hold it. Now on this one, the histogram is also in overbought territory. So it might have been better if we had entered on this one back here when it was just starting to move up and it was in a squeeze. However, the bars are moving up. And over here, we've got actually a positive PPO starting to move higher. So this one looks a little bit better than Celsius, but neither one have hit the stops yet, and very minimal loss if they do. So we want these to prove themselves right from the beginning. And so far, if the market turns around and starts to move back up, and I think it will all depend on NVIDIA tonight. So keep an eye on that and see how NVIDIA reports after the close. And I'll talk to you more about that when we do close. All right, that's it for the midday update. Thanks for watching, and I will talk to you later.